The pressures of trying to buy a house in the Denver metro area are pushing some people to a breaking point. Yet the experts say sitting it out could cost you even more later. Our real estate expert, Lane Lyon, joins us this morning to talk about that. Lane is the managing broker at Coldwell Banker, and he is in living color this morning.
Hey,
nice to see you.
Nice to be here. Good morning.
Boy, in the flesh. We did that Zoom for so long. Anyway, times are tough for so many people right now, but you say they should stay in the game.
Absolutely. We know that the demand is very high. Inventory is low out there for people looking, but we do see buyers who are heeding the warnings. They're picking up the pace, and they want to buy their house before interest rates go up and home prices go up. We know that a mortgage loan officer recently crunched some numbers for the Denver Metro Association of Realtors just to show what the cost of waiting would look like. And Nicole Ruth based this on $650,000 home purchase with 10% down, okay? She considered these numbers conservative when you look at rates and appreciation. I agree with her. So just waiting 6 months could add another $100 to your monthly payment. Now waiting a year, if you look at that, could cost you $364 more per month. That jumps to $600 more a month if you wait 24 months. And look at 3 years from now, you could be paying close to $1,000 more a month on that same home. Not to mention, Gary, if you're renting right now, the longer you rent, the longer you're putting money into someone else's mortgage instead of potentially offsetting yours.
Those numbers are pretty staggering, actually. So as prices keep going up, though, a lot of people are feeling forced out because they simply don't have the money. They can't afford it.
We understand that. There are some people who are like, you know what, gosh, it's just getting a little bit higher than I thought it would be. The Mortgage Bankers Association tracks the number of applications for mortgages across the country. And last week, they said the number actually was down a little bit. The week before, they said the numbers were up. So it's really all over the place. Lenders that I've talked to here locally say it is business as usual. The buyers that they are working with understand that they're paying a little bit more on their mortgage now compared to 2020 when rates were in the 2 and 3% range. They're in the 4% range. But they know that they will probably be saving money if they get into this game now versus waiting 6 to 9 months, as we saw from those numbers.
What about the people that they have a number in mind that they can afford, and it's just not working out to that number? It's going to be more. What do you suggest for them?
Well, it's tough, especially when you start getting into a competition and that number goes up and up and up. So the first thing, you definitely want to get pre-approved with a lender. Know your numbers. Know what your max offer price is. That might mean you need to, as much as I hate to say, scale down that price point just a little bit, but also keep in mind taxes. Taxes vary in different parts of the metro area. So you may actually find a house with lower taxes. That's going to help the payment. All of those things play a role, but that communication with the lender is really going to make a difference in the end.
Man, it is really confusing out there right now.
There's some strategy to it, Gary.
I'm telling you. All right, Lane Lyon, as always, it's nice to see you.
My pleasure.
Thanks.